Michael, you want to jump in and add? It's a really good topic.
Can you guys hear me?
Yes, sir.
I had to just log in. I wasn't able to hear anybody talking until just you saying, "Would you like to chime in?" Is a really good topic. I don't know what was said. So if you
Oh,
could
okay,
repeat what it
okay.
was, I'm sorry.
Well,
I'm sorry.
AM, would you mind kind of plugging back in, pretty please? Because you made some very good topics, and it is recorded, so folks will get a chance to go back and listen. But if you wouldn't mind just refreshing the room with the topic, pretty please, with what you
Yeah, of
said.
course.
Thank you.
The
Thank you.
topic is all about, when you become a trader, you're always trying to help your friends and help other people also become traders. And the thing is that not everybody is meant for this industry. Not everybody has that mindset and that discipline behind themselves to make it in this industry. And to the people that you do put on who do fail and who can't make it because they don't have that mindset in industry, it kind of ruins them from what I've seen, because they see what could be, but they can't make it happen. And so probably the best thing for them was never even be put onto the industry, in my opinion.
And we were also kind of saying like people are attracted to the industry for all the
Yeah.
wrong reasons.
Mm-hmm.
And then they end up leaving, or if they end up staying, they have to stay for the right reasons, or else they get flushed through just like a washing machine, right? And you were also commenting on some details specifically from the lecture of some technicals that you enjoyed, and I would really appreciate if you wouldn't mind repeating that as well, AM.
Yeah, of course. Honestly, Michael, I'm a perfectionist, so everything you say I take very literally. You know what? So when you were always saying how you don't want to see fair value gaps, the body's close outside, or you want to see it respecting the quadrants. Uh, I really liked how today you brought up the little shish kebabs and how you didn't mind that the bodies of the candle were just painting outside because they're really small bodies, and to you it was kind of irrelevant and they didn't really mean much. So that was a big thing for me technically, that now I know that is permissible, that I can allow that in my trading and in my tape reading to occur.
Yeah, it's kind of like a hallmark right now with a lot of the PD rates I have that I haven't taught yet, and some of them, admittedly, I know you guys don't like to hear this, but I'm not going to teach all of them. And the ones that I keep close enough to me that it's just for me and my kids, they have similar signatures right now because of the volatility and the decoupling of everything that's going on. Like I can't stress it enough, and it sounds like a broken record. I notice to some of you, but if you're learning right now, every advantage that you can have in your favor is going to reduce the frequency and the list of opportunities for you to be participating in. And unfortunately, in today's climate, that's usually frowned upon because we're all supposed to know everything. We're all supposed to know when, what, how many, and when to get in, when to get out, and do it perfectly. And because I talk to my kids, because it's them as the audience, and you guys get to be part of it, I want them to be encouraged when they see things like today, like seeing things that I point out and say, look now, Caden, this is normally when dad looks at this stuff, this is what I don't want to see. I don't want to see a body outside of that, because what it does is it diminishes the likelihood of it being as precise as I would like it to be. Now, I have PD arrays that price can color outside the lines of, and they still work. But when there's an inefficiency, or if it's an order block, and I'm looking for them to show a sensitivity around the upper half or lower half of it, I kind of like demand that these things are in place before I participate, because I'm not just doing demo account trades because I'm a trader. In the public eye, I'm doing demo account trades because I don't want the trouble that comes with me enticing people to trade with real money. That's why I stay with this whole shtick of mine that I'm the demo baller. This is the way it is. But I know a lot of you are going to look at what I'm doing and what I'm teaching, and you're going to see it happening in your own hands. And you're like, you know what? I'm going to take the leap and I'm going to do this with my own account. And I'm going to learn because I feel like I got to do it. And this is the only way I'm going to learn. And I don't think that's true, but you're going to try it. So it would be poor. It would be poor form for me to spread this information and not bring out the details that help ferret out the things that make it better. And by me teaching what's permissible in price action, what's not permissible, um, I kind of expected some kickback tonight and tomorrow in the comments, probably the rest of the week, talking about how, but you said in this video at this minute marker that if it does this, you don't want to do it. Right. That's the optimal condition. If it doesn't do it, that's the best. That's the best. But how many things, let's do it this way. Not all of you here just do ICT stuff. Some of you do volume profile. You might not want to talk about it because you think I'm going to be mean to you and make jokes about it, and you're probably warming up to it. You can admit, if you're honest, that even that stuff sometimes in recent market activity, it's just like, wait a minute, it's not as good as I'd like it to be. Maybe you're a supply and demand trader and you're getting a lot of false signals because the markets are just simply saying, fuck you right now. That's what they're doing. So by me sharing things like tonight, having that little bit of a deviation outside of the levels that we'd like to see the body stay inside of, when it's something like that, that small little segment of price action that still by definition is the body, but what type of body is it? It's an insignificant amount of price action. So to me, I disregard that. So I'm glad to hear that you had that epiphany, that it encourages you. You'll see that if you go back through some price action in the last 3 months or so, you'll see it's in the lower timeframes a lot, and it still provides the catalyst for the PD rate to perform as it should.
Yeah, I've definitely noticed it on like the 5-second time frame as well and everything like that. But thank you so much yet again. It was definitely groundbreaking for me to hear that. I do have another question, Kit, if you'll allow it. It's about yesterday's lecture.
Oh, absolutely, brother. You're crushing it today. Pretty pleased.
Yeah, I was re-listening to it. I wasn't able to make it, and you mentioned, Michael, that there is a man who marks out the opening ranges and the historical data on them the past 5 days, and with that, taking the highest high and the lowest low and doing a dynamic range every single day, you can get different gradient levels and different key levels. So with that, my interpretation is if you can do it on New York opening ranges, that means you can also do it on opening range gaps, end dogs, and end wogs, or anything else that you're kind of using to pull key levels off of. Now, are those key levels more, I want to say, influential than the regular opening range gap or regular New York opening range key level because it's taking a wider area or more context, or is it just like another key level that you can add onto your chart and use?
Well, the aspect of it being key is that it lays over top of a gradient level. So it doesn't matter if it's the opening range gap on regular trading hours. It doesn't matter if it's the new week opening gap, if it's the new day opening gap. If you're using 5 of whatever those ranges you're using to give your highest high and the lowest low of the range that you're only going to operate inside of that canvas, you know what the highest high is and what the lowest low is in deference to whatever the highest inefficiency you're using. And we'll just say, for instance, the new day opening gaps. Okay, we're going to look back the last 5 new day opening gaps. Whatever the highest high is in the new day opening gap in the last 5 days, that's the highest of the range that you're considering right now. That's the highest point that you're focusing on right now. What's the lowest low of a end dog in the last 5 days out of the 5? Which one's the lowest? That's the lowest portion of the range. Now, what happens if it trades below that? You're going to sit on your hands. You're going to do the new math when a new day opening gap comes in, and if it's now giving you a range to work in, now you can trade. But you have a range to work within. Inside that range, every one of those ranges has a gradient level. And when it agrees with a PD array that forms over top of that during a time, like a macro or an opening range, now you have a key level. It's not a key level unless that criteria is there. If you're in the lower portion of that canvas that you defined, you're in a discount. So it would be more apt to provide setups on intraday where you can run to buy side liquidity or a premium inefficiency as a draw on liquidity, because in this range that you're defining, it's always going to be dynamic. It helps you frame that, yeah, I'm reminding myself that I'm oversold in this range based on algorithmic PD arrays, things that are going to be salient to future price action. It's going to draw to these levels again. They're pertinent. They're not just one and done and discard and throw it out the window because the gap's been used, the gap's been filled. It doesn't work that way. But by having this grid mentality, you now have framed out a canvas in which you're going to work. And if you're in the upper half of that, what does that mean? You're in a premium. So you're going to be more apt to find setups that run to sell side liquidity or a discount inefficiency as a draw on liquidity when a key level lines up to perform a short on it. So it's got to be time, price, and a gradient level.
Thank you so much for that clarification. That was great. I just assumed that if it was a gradient level pulling it from the opening range gap or end dog, it was automatically a key level. But thank you for the clarification. That really cleared things up for me.
You're welcome.
The high ticket mentorships are so pissed right now. They're so pissed because the amount of information that you guys get for free from Michael himself here, like there's literally folks that try to obfuscate some of the details and some of the nuance and literally the process and the procedure. And when it's put in the public record and it's recorded and it becomes content that becomes listenable again, then kind of becomes a real bummer for those high ticket folks. Anyway, I just kind of like bringing that up. It is 3:09, by the way, 10:15. I like the time. Sabaflab, how you doing, buddy? Sabian,
Yeah, what's up, bro?
not much.
Sorry, I must have jumped.
I got you. Did you get a chance to check out the YouTube at all?
His most recent live stream today. No.
Okay, that's fine.
Yeah. So I'm just here.
No, I got you. You're busy doing your thing. That's cool. I appreciate you. Venom ICT is here. Venom, you're in the DMs a lot, and I know you're super excited to be here. You were watching, correct?
Hello, Kitt. Hello, Michael.
I know you're excited to be here, buddy. Please follow the protocol.
Hello, my name is Hassan, and I am from India. I'm 21, and I have been trading from 2023 February. Earlier, I used to trade Indian market for 1.5 year or 1 year. Then I came into Forex for 1 year. I was not profitable. And then 5 months ago, I came into futures. And I was trading market maker models, and now I'm practicing high frequency trading. And I have a question, like we use 1 minute time frame for draw on liquidity, then 5 and 15-second chart for execution. So I want to ask that in 5-second charts there are so many FVGs and order blocks. Then sometimes I got stopped out for that. Like which one to choose in 5-second chart?
That's a great question, Michael. That's a good question from our friend Venom ICT. Good job, buddy.
Well, if you were just listening to what we were discussing with the previous student, or let me say this with the other caller, the individual was asking, what makes a key level, or at least that's how I interpret it, and that's what I discussed.
Mm-hmm.
The gradient levels, whether it be an opening range gap, new week opening gap, new day opening gap, you're going to have an appreciation for these types of data. And you're going to find that when the fair value gap forms on a sub 1 minute chart, when that PD array forms and lays over top of a gradient level, and you see it materialize and manifest on a smaller 1 minute time frame, it yields much more emphasis. It's much more significant. validated, if you will, if it's on top of a gradient level. Because if we can agree, for the sake of discussion, that the market is algorithmic and the price engine that is the facilitator for moving higher and lower for price, it has to have a way of calling back to a specific range in price, a specific time, and the criteria in which it's supposed to spool away from higher or lower as a result of going back to that. So it has to have a mechanism, a procedure, a script to go back and call upon an old reference point. And it has to be delineated by time first, and then at what time and at what price. Well, the gradient levels, they're just like I don't know much about football as a guy. It kind of sounds queer, but it's just the truth. I don't know much about football. But you have these what the hell you guys call it? What's it called? What's the lines called?
The
Yard
referee.
lines.
We're talking about the field. What are we talking about? The pitch.
Yard lines.
Okay, yard lines. American football yard lines. Yeah. Okay. Yeah.
Okay. So when you have the play to make, they all line up on the yard line that they're supposed to start from. Well, that's the same thing with a trade. The PD array that lays down on top of that yard line, which is the gradient level, when it's the right time to make the play, you can't do that play until the referee says, okay, now it's time. Get on the line, let's do it. They can be out there pissed off and talking about what they want to do, huddle up, blah, 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 blah. But it's time now to do it. Well, that's what the algorithm's doing. It's going back to a specific yard line. It's waiting for the playbook to match up with that PD array. When that PD array lays down over top of that gradient level at a time, macro time or opening range, then that PD array will be useful. Then it will work. Then it's action. Then it's start working towards the end zone. But until that happens, just because you see a fair value gap means nothing. It has to lay over top of a gradient level at the right time. That's what validates the fair value gaps. That's what makes them work. Just because they're there doesn't mean, if you take a blank chart, just pull it up, and you'll see there's lots of fair value gaps that never get utilized. They just simply they're not considered. They're like the stepchild. I'm over here. I'm so nice. Look at me. Why isn't there an institutional order flow entry on me? Because you're not laying on top of the gradient level. Why aren't you giving me half the gap closure here? Because you're not laying on top of a gradient level. Why didn't you completely close this gap and give a complete, perfect, immediate rebalance and then run? Because you're not laying over top of a gradient level. The gradient level then propels it up to the upper echelon of now this is a valid PD array. Same thing with an order block. If the order block doesn't exist and lay down over top of a gradient level, it can't be a key order block. It can't be a key level. It can't be utilized just because it's a down closed candle doesn't make it a bullish order block. Does that make sense? You understand now? Or if you don't, start studying with that mindset, because then you'll start seeing the ones that work.
Venom.
Thank you so much, ICT. Thank you so much. I have got so much clarity, and thank you, Kitt.
Dude, I know that was like everything you could have wanted. I mean, I know I'm smiling for you because I know you wanted that bad.
I'm very, very happy right now. I can't say.
I'm happy for you, buddy, because I know you are. Like, you're glowing. I can tell. That's
Love you,
good. I
ICT.
like it. I like it. I like it. It's great. That was an awesome answer, guys. Folks, understanding the PD array matrix. The matrix. It's a matrices. That means there are horizontal and, dare I say, vertical lines in which you are creating these matrices in which you are. This grid, I believe, is the term he utilized in the context today, and your RTH gap. It's kind of a thing. So yeah, I know Venom's really happy he got an answer and he was looking forward to that. So ICT Michael, thank you very much for that. I know Venom is happy. We'll bring up the specimen. The specimen, are you there, buddy?
What's up, my man?
Not much. You know the protocol, correct?
Of course.
All right.
So my name is Devon. I go by D, or my screen name says the Specimen. I'm 38. I was a child and youth worker for 5 years, and then I got into oil and gas and did welding for a few years, and then I've been doing pipe fitting. So trades background. I originally got into trading through a gentleman who kind of taught for free. He taught the whole indicator thing, and then he actually brought up ICT on episode 66 of his free lessons. And I remember writing down, do I pick ICT or do I pick this guy named VP at the time? And anyways, I used the indicator thing, didn't really work out for me. And then I got into ICT through his old Twitter podcast. And we're all a bunch of students here, and we all learn this material differently. And I chose to go with the ICT thing or ICT's methods, because the whole indicator thing wasn't working. I was always kind of looking at these candles starting at the bottom, and then I used to wait for, oh my gosh, this baseline thing, blah, blah, blah. But for the students that are listening, I got into this through the podcast, and I listened to all of his rants, all of his knowledge, all of his shared content, all of the recorded data that he had from pretty much as early as I could get it. And I literally took notes from all that stuff. And that's how my journal kind of started.
So wait, you're
And
saying, just to reiterate, what you're saying
yeah,
is that you came across Michael and it wasn't through his YouTube channel, but instead through his X feed?
correct.
So you came across Michael and you studied Michael through a medium that this might be shocking to him, in which you were a student then that really focused on all of the content that you came across of his through X before you went to YouTube or anywhere else. Is that correct?
This is correct.
That's what I
This is
thought I
correct,
heard.
Kit.
That's what I thought I heard.
Kit, you're 100% correct. And I just wanted to add that in because
That's a
like I had
fascinating
like
perspective in adding, just with your own life and lifestyle and what you do, and for whatever reason, the audio format and resonating with it. I'm sure that's probably pretty fascinating content or feedback from Michael. But anyway, continue,
mhm.
buddy.
So I took I took those podcasts, those Twitter talks, and I kind of broke it down, and I just listened to what he was talking about. I wrote down the things that he was saying, the PD arrays, the time, the framework, all this stuff. And I never looked at the chart yet. I just kept on writing everything down, everything that he's saying. The structure, FMOC, two-stage delivery, blah blah blah. Everything that he said, I wrote it down. I got books of it.
I love it.
And then
I love it.
and then, eventually I obviously got to the YouTube, and then I started going through his 2024 mentorship because I just wrapped up pretty much all the podcasts or the Twitter
Wow. So like
talks.
that the Twitter space is another kind of way of saying core content in like the newest way. And it's a different medium. And I'm sure it had to do with your work and just with what you had to do. You were able to it was easier for you to consume this long format content, I presume, in that audio
Exactly.
format before you engage with the chart. I mean, am I wrong or like?
And no, you are 100% correct. Because we're students, right? Like the first thing that I'm eventually going to touch on his YouTube stream that he did today, but it's important
I
that we
love
learn
your
to
journey.
listen.
I love it.
I appreciate that, man. It's important that we learn to listen. And some of his talks are 4 hours, or 5 hours. He's sitting in the parking lot. He's talking in his car. He's talking about, oh, someone's coming up to my car. You better walk away. The birds are chirping. A bunch
I
of stuff.
remember that.
It's beautiful. And when I got to his YouTube now, then I got to obviously see the content. But because I took all those notes from what he was saying, it kind of just was him reiterating his his the things that he talked about. So now I get to see the visual representation of, man, what's in this guy's head? What is he talking about? I can't see what he's talking about. Three kind of pattern breaker, this, da, da, da. But now I got to the YouTube, I get to see it now visualize. And then I get to connect the information that was in my head, things that I wrote down, to the visual, actual language of what he was trying to say. And Eventually, I got through the 2024 mentorship that kind of made it real mechanical. And I just want to say this because I know this rabbit hole gets really deep, and I'm not going to go there right now. But I had a whole year of these first presented fair value gaps, new week opening gaps, um, new day opening gaps. I had that for a whole entire year. And Michael always says that this thing gets deeper for the students who really want to pry into it. I'm not saying that we all have to pry into this information, but there's a lot of content that he just speaks, and it's just there if we're willing to listen and follow the breadcrumbs. He's actually just given us real, like, real full bread now. Before he was kind of scattering it out, and he just made the students kind of find it. So now he's just showing it, which is a beautiful thing. But anyways, I'm gonna try to like keep this night, calm this down a bit. But I just want to touch on. Oh, sorry. And the weapon that I use is the fair value gap because to me that's easy to see. And then I use his other PD arrays, the order block and everything else, rejection block, as just confluence as this sell side or buy side of the
Right.
curve is building up.
Month
But
four PD arrays, building your market maker models, buy side, sell side of the curve.
100%. And I kind of go with the sessions, Asia, London, New York, and PM, AM, lunch, da da da. And I kind of frame each session, each kill zone as its own individual candle. I'll just leave it at that. People can look into it as they want. But I want to touch on his space that he just did on YouTube there. And it's just reiterating the whole details of just listening. Like we all come here with questions, and trust me, I have questions, but I'm not gonna bland them out now. I'll jump in your DM, Kitt, or jump in your DM, Michael. But the importance of just listening to what this man is telling us. He's showing us the higher time frame bias with these charts that he's presenting on for his market reviews. He's showing us the market structure through how markets are stuck in the consolidation. He's showing us how to understand, limit the risk a little bit. He's teaching us the psychology through it. He's showing us full parameters. He's showing us, hey, this is the model, 37 and a half handles, mini contracts. Like there's a model and framework that he's already building for us. So if students are lost, just listen to what he's trying to say and just literally apply it. And the last thing I want to touch on, sorry for ranting a bit, but it's kind of what you said, Kitt. And it kind of full circle moment, exactly what I wanted to share tonight was the details of things that are recorded. These spaces are recorded. There's a lot of details, there's a lot of content, there's a lot of data. And if we just listen and become a student and write things down, Michael always says, and he says it for years, there's questions we're all going to have as students, and he's literally curated core contents. He's curated his talks for the questions that he knows as students we're going to have. We don't even know that we're going to have the questions yet, but they come up, and he's just putting the material out there, and the questions will come. So sometimes we get on here and we want to ask a bunch of questions. Kitt answered this, Michael answered this, but if we just listen through it, it'll all just come. It'll just trickle down real slow because we can't get it all at once. But Fight Club is
And
Fight Club.
keeping it real, we've already said it, right? Like it's already been taught. Like there's nothing new under the sun. You're really going over something that we've already gone over. But in reality, there's so many different aspects and perspectives and kind of angles that we're all looking at the same thing but differently, so that we have to repeat it. And the more honestly, as traders and as a community, that we kind of take the initiative to try and help our fellow trader and
Hmm.
articulate a concept to our fellow trader, then that helps us understand the concept as well. And I'm here on Front Street to tell you, I've been like Neo. If you've watched The Matrix and being in DMs and everything else, it's like, oh, you didn't know? Look over here. And it's just like, wow, in the DMs, it's like, I can't believe how much I understand and clarity that you get from each other, right?
Yeah. Once again, Kitt, thanks for bringing me up. I appreciate it. I'll go back to listening, but thank you both. And I'm just being back. I'll just sit back and be a student and just listen more and take more notes. But
I would love Michael's feedback. Michael, this has got to be probably one of the first times you've heard a student come up. I don't know. I can't speak on your behalf just in listening, but like he's really been a student of yours with work or whatever, just through your spaces. And there's
Yeah,
so much
that's the first
content
time.
there.
Yeah, it's the first time I ever heard anybody come through that journey, that pathway to where you're at now. Usually, it's something that someone shared, like my paid mentorship. It was being tossed around like crack on the streets. I mean, everybody was getting their hands on it and then reselling it and doing whatever they
Yeah.
could with it. I've never heard anybody just say, "Yeah, I found you through basically an audio file and listened to you talk, and then went through the actual lectures where things could be, you know, codified and shown. This is an example of it. This is what makes it valid. This is what it doesn't make it valid here." You're the first one I've ever heard that went
Your
that way.
Twitter spaces are a form of core content, and he is proof of it. He's living proof of it.
Yeah.
I
They
mean,
definitely are, Kit. And I just want to add one thing
I
too.
believe it. I believe it. And I'm like, I got tingles right now. I love hearing this. This is like news. This is awesome.
And you know what's cool is like after I took all my notes and after I went through the specific content that I needed to just see that for myself to learn the language and understand what's going on. Obviously, you guys do NQ every day. I've never traded NQ. I've never looked at it. Obviously, I look at what he's teaching on a daily basis, but I use um, his market analysis just for how he's looking at these things, and I'm always trying to predict what he's trying to say before he says it. If he's saying he's using something, I'm always like, boom, this is what he's using. And I try to pause the video before he says it so I can say it as well. And then I just replay it and then, okay, kaboom, okay, I'm on the same page as him. But anyways, I went to gold and I've been using gold for the last couple of years. And I stay away from NQ because I wanted to prove it to myself. I plot everything he says. And this was before going to the YouTube. I'm plotting
That's the
these.
thing. You've done this. Explain. Will you pretty please, in detail, explain more why you were drawn to the spaces? Your anecdotal, personal experience. Do you work in security? Do you work something to where you work nights, the evening? What draws you to that specific medium or your specific experience?
Um, I do a lot of meditation and I go to the gym a lot. And just through my work, obviously shift work, sometimes I do 14 days on and I do 14 days off. So I try to occupy my time through reading books, going to the gym, meditating, and just learning things. So the spaces was a great way for me to just listen through going for a walk, listen through going for a run. I'm at a gym, I'm just pumping through these talks and I'm just like, okay, cool. He says something about framing the daily range of this way, framing this. And I'm just like tracking the information because obviously going to the content on YouTube, you have to sit there. Now you're stuck at the computer. And my lifestyle wasn't really giving me that time at the moment. So his
That's what I
talks,
was thinking, and
yeah.
I'm excited actually for you to be able to explain this to Michael because
Mhm.
I think this he's saying it's the first time he's hearing it. It's the first time I'm hearing it. It's a buzz to me. I think it's super cool.
Yeah.
I mean,
And
it's really cool.
he kind of like, Michael's a very hindsight, foresight, a lot of foresight. So even in his past talks, he's like, I don't know who's listening to this right now, but if you go in the chart, you'll see what I'm talking about. And I was like, okay, cool. Oh yeah, I'll listen. Da 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 da. So I'd go and like find these information that he's talking about. And this stuff, obviously, this happens. This repeats daily, weekly, monthly. It's a whole thing now. For those that are still disbelief, once you see it, you can't unsee it. Once you understand what's happening, it is what it is. But I did not use NQ because I heard what he said regarding just go in your own charts and prove either him wrong or prove him correct or just prove it to yourself
I love
that this
that.
is
I
what it
mean,
is.
that's the exact. I mean, I'm pretty sure he's Michael. Would you like to add at all to
Yeah.
anything the gentleman's saying here? I'm buzzing over here. I think it's great.
No,
I'm
I
just
don't.
curious to your thoughts.
I don't want to interrupt him. I'm listening.
Yeah. So yeah, and that's why I chose to that's why I chose to just go to
My
gold.
bad.
And I was like, if he's telling me that this is across all mediums, this is across all platforms, then I'm gonna go in here and prove this shit to myself. I'm gonna put this Friday closing price. I'll put this Sunday open. I'll put this 414. I'll put the 930, and I'll just sit here and watch this friggin' thing print to where it's supposed to print, and I'll take my notes and see what he's talking about. And then obviously I can't talk to him directly. This is my first time ever. I didn't have anyone to talk about because no one in my life was trading. No one in my life did this stuff. And I didn't hear I know Mike always talks about people in the community and all this fighting shit happening. I kept my life very chill, very simple. I just was just learning. I wasn't even like, oh, I'm gonna be a trader. I'm gonna learn because I like learning and I'm a student. So everything he talked about, I just plotted this thing within gold, and I've been tracking gold for since 2014. So anyone could come to me and be like, yo, do you believe what this guy's talking about? It's like I believe it because I see it. Like I see what it is. Like there is nothing else to, and I could sit with, you know, here's a super funny thing that I did too. I have a couple nieces and nephews, and one of my nieces, I was like, you see this green candle? This is like the Hulk. Because I was teaching her like the whole fair value gap stuff, and I was like, this is like the Hulk. And then these black candles, this is like Batman. So anytime there's like this three candle pattern, this is Batman, and Batman will use this three candle pattern to kind of like go up or down, depending on the function, or use the Hulk candle to go up and down. And my niece would walk across, and sometimes she'll see me on the screen, and she'll be like, "Oh, that's the Hulk," and I'm like, "Show me where the Hulk is." And she's like pointing at the screen, like this candle, this candle, this candle. And I was like, his information is so relatable, and it's like, what's the word here? It's like transitional information. Like it'll you may not be able to talk to him directly, but it's broadcasted through yourself, and you prove it to yourself, and you could show it to anyone else. And if kids could walk past and look at a fair value gap and be like, hey, that's the Hulk, that's Batman, to me it's like, okay, let's make this as simple as possible now. This green candle is going to use to go up, this black candle we're going to use to go down, and if it goes above it, we'll just invert it and inversion and go up with it too. But it's really important for the students with a lot of question. It's like before you want to ask the question, just sit with the material and sit with your questions, write them all down. And as you're looking at the charts, the questions will be answered on the chart. And if they're not answered on the chart, because maybe depending on where you are in your learning, they'll be answered through Kit Space. They'll be answered through Michael's talks and his market reviews and how he just trickles the information throughout the year. Like all that stuff's answered. But there is what he talked about on YouTube was this shit's not going to be easy for no one. It wasn't easy for me, wasn't easy for Kit. It's not easy for none of us all, period, because we would have been another Michael, easy, boom, boom, boom. We're slowly all becoming students of his, but none of us have it perfect because he's not going to share everything. But as he always says, we have enough. Never be fearful. Don't be scared. Charts were printing before a lot of us even knew what trading was. Charts were printing before none of us knew that we wanted to be traders. Charts were printing before we wanted to take money out of prop firms or the real live market. Charts were just printing. And this man who we call the mentor, this man who we call Michael ICT, he was in these charts doing the hard work that we're now going through ourselves. And he collected this information and he's sharing it with us gracefully. So for a lot of us, be students, man. Take this shit every day at a time, every week at a time, every month at a time throughout the year. And just know that we're not going to get it within a week, within a month. I was listening to Twitter talks. I wasn't even on core content. I wasn't even listening to Kitt. I didn't know what none of these people were because Michael told me through his talks, this trading shit is a solo sport. You got to prove this shit to yourself. So this community is amazing. Obviously, Michael's here to share his talks with us, but this thing is a real solo thing. And Michael always says, once you figure it out, give him the middle finger, just joking, but walk away and do your thing. Because your experience is going to be the best thing for you. You can't call him up, he's living his life. You can't call Kid up, he's living his life. We have the community, but yourself and your own experience will give you the best visual representation of, do you really get this shit? Can you really use it in your own hands? And that's it. And then we come here and we listen and we chop it up. But I'll let other people speak, but I just want to share that because I
Well,
started coming I started coming into these spaces and I was like, I'm not really following what Michael says about, hey, stop with the social media, turn the shit off, focus on your charts. All the answers are in there. But then we also need community, and community is also really important. And I'm a person who's very solo in my life, like don't have really parents and all this stuff, but I pop into Kitt's talks and I always listen. Everything that Michael comes up with now, I listen. I let him distract me from what I'm doing, but I listen to what he's trying to say because maybe he'll give me a little bit more clarity. But what I have right now is enough for me. The clarity that he gives just enhances the things that I already have. I'm not going to jump around and use no rejection block and no order block at the moment. My fair value gap is perfect. I could see the order block getting traded through. I don't have to use that opening price. I'll wait for my fair value gap and just use it there. So, anyways, thanks for letting me rant a little bit.
Well said.
Kit, I'm gonna mute my mic.
Rock on, man. Michael, do you want to jump in? Just at all? It's good.
No,
I mean,
I enjoyed it.
yeah,
What he was
yeah,
saying
me
was on
too, man.
point. I like the fact that he reminded folks that it's okay. I'll say it like this, and please understand that I don't mean this in a way that, because you all know I hate the idea of people talking to me or treating me like I'm a celebrity. I'm hanging out with all you guys. Like I'm part of this. So I don't want you looking up to me. I just want you to look across to me and say, hey, like you're a brother in arms. You've been through this. I take what you say to heart. Do you have anything to share on this matter? And that's all I want to be here. But if I could go
Rock
back
on.
in time, and if I could be honest and tell you, if I had this, like say Larry Williams was doing this, all of us would be a part of that. We'd all be sitting in, listening to whatever he wanted to talk about, whatever he was going to talk about, whatever he's going to say. We would be listening to him because the man's done more than I've done. So he's been trading longer than me. He's got more stories I would love to listen to. And if I could have had this with Larry Williams, I would have looked for any excuse just to have any old question. I would just come up with something on the spot just to get an opportunity to have an engagement with him. And unfortunately, I think sometimes people use the idea of, well, if I can ask a question, then I have this little moment and snapshot in time where I actually talk to this guy, Michael, like I'm special. I'm not special. I'm just like you. I'm just like you. And I'm thankful that he mentioned how it's important for you to want to defer that immediate gratification because you have a question that come up. You write that question in your journal, and what you're going to find is 90% of the time, you're going to get to a video and you're not expecting the answer to come. You're not thinking about that question or that thing that was a hang up for a while until you get to this one particular video where I'm going to bring that to light. I'm literally going to give you the answer that you wanted if you had an opportunity to sit with me. And you're going to realize that, hey, I've been learning all this time new things. I knew much more about other things that helps me be a well-rounded analyst. I got this answer now. And it was just like he said, it will come by a natural progression through the content. And sometimes you'll go back and watch a video you've watched before. And that answer will jump out like I went in there and I edited it. I added it for you. And you're like, you're swear up and down like, that was not there the last time. And there it is. There's the answer the whole time. But then you'll realize that the question you thought that was so important, you can't get past this unless you have an answer. You're just never going to do anything more with smart money concepts and ICT. It isn't the thing for you because you got to have this answer or else. You'll find out that the thing that you think you need the most, you don't. And you'll find it in the content by natural progression, going through the content, going through it, consuming it, and doing it the right way, writing your questions down. But the answers will be much more meaningful to you because you'll arrive at that answer in a way that is going to be impactful and it's memorable. It's not the same thing as, well, if I give you an answer to a question, like in this medium that we're having here, you get up, you ask a question, and I answer it. Oh, great. You're going to walk away a couple months from now. Someone say, you know, that guy. I said, yeah, I talked to him on the internet. We had a conversation before. You may not even remember what the question was, but you now made that little bullet point in your timeline on this earth that was a moment you had a discussion with me. It doesn't mean as much. The question doesn't mean as much. Whereas if you have a question, you write down your journal, you fossilized it, you dated it, it's meaningful to you. Then when you discover it, many times in a setting where you wouldn't expect it, you can go back in your journal and say, I got the answer to this, and this is where I got the answer from. And I learned that I used to be so obsessed about needing to know this. Which fair value gap do I buy in the morning session? Which one am I supposed to use? Which one? And then all of a sudden now, you can go and say, well, he explained that by having these gradient levels and an agreement with time, that's what qualifies the setup. And as long as I had the right draw and liquidity correct, that validates that PD array, and it should be profitable for me. It should work in my favor. It has the highest degree of efficacy that you can attribute to it. So I mean, it's just I get it. I would have been fanboying, any opportunity to talk to Larry Williams, and I've only had an exchange with him, twice or maybe 3 times in email. That's it. I've never had a handshake. I've never met him face to face. I've never had a conversation over the phone with him. Okay, I respect the man. I don't want to inundate him with stuff like that.
I'll work on getting him up here. I'll work on it.
I have a meeting with him slated. Let's just put it that way.
That'd be awesome. That'd be so
Kitt,
cool.
Kitt, Kitt, can I add one last little thing?
I think so.
Real
Why
small,
not?
real
Yeah.
small. And this is just for the whole community here. Even though we're listening to Michael speak, and obviously Kitt's hosting the space, just like Michael, just like Kitt, all of us, we're all literally making history off the winds of Michael's information, for sure, off the winds of Kitt's lives and roundups, but all the questions that the listeners come up with, the students come up with, all the people that are listening, we're also building our own little legacy within this little space too. So all our voice kind of matter. Yes, Michael's a mentor, Kitt's hosting, but every single person's voice matters. When we're all at
We're a
home,
collective. Yeah, we're a collective
yeah,
consciousness, bro. And
we're-
what you're saying is important, and being able to voice your opinion, being able to breathe. There's 2 things I was talking earlier. To be any type of consciousness, to tap in frequency, vibration, you're going to have to speak it into existence. So you have to think it, you have to feel it, and you have to speak it. Those are the 3 things. If you want to manifest, you have to think it, feel it, and speak it. In speaking, this is a place in which you can manifest. This is a place in which we have manifested. Everyone that's here understands very clearly the manifestation. This is it. And what it is when you tap into a group, it's just like group think. There's a group sync, and you can actually amplify thought. You can actually learn more, connected in like a neural net. It's a collective consciousness. And when you say that, you can actually tap in. And sometimes you have to close your eyes. Sometimes you have to take deep breaths, but you can really tap into the energy, and it's healing. And when you come up here to speak, you're speaking, thinking, and feeling, which is manifesting. And when you can release pain, then you're going to allow for, the future to come. And that's our AMD. That's what we're doing in life all the time. We're accumulating, we're falling down in manipulation, then we're distributing. Last year was a snake year. It was coiled. This year is a horse year. Unbridled energy. Shitstorm, clearly, but unbridled energy. Everything that you thought about last year, everything that you accumulated mentally, you will distribute. So what you need to do is focus on scaling. This is a year to scale. This is a year to really pay attention to the detail, to the nuance, and to apply yourself to scale. That's why we're here. It's your responsibility to pay attention to the nuance. It's your responsibility to tap the fuck in, because you're a provider. And if you're here to trade, you're here to provide. And what we're doing right now is the best possible thing you could possibly ever do. And the assignment and really recalibrating, you're manifesting, making your life easier by studying while you're working. You got to make a couple $100 just to try and pay a couple bills, not sit here and lose in the market. You're actually winning. And when you're winning and you're compounding it, it's like you're actually winning. Watch my live streams. I promise you, you'll have a solid idea. Pay attention to Michael's everything. You'll have a solid idea of what's going on. You're gonna be lined up, real nice and neat, real purdy like. Then you just got to make some good decisions because you're lined up. And you tap in. Real happy with the specimen today. Thank you. Real happy with AM today. Thank you. Very happy today with Venom. Thank you. Excellent questions. High caliber energy. High caliber thought. High caliber feeling. That's manifestation. That's group think. That's group sync. Trader Roundup, that's what we are. That's what we do. We're stronger together. We can accomplish more in 1 year together than we can alone in a lifetime. We rise by lifting others, and the markets will provide. The markets do provide. Doesn't matter where you're from. Doesn't matter what you ate. Doesn't matter where you sleep. You're a professional decision maker, and you need to make good decisions. And that matters who you hang out with, and it matters who you don't hang out with. A lot of traders need to understand isolation is a gift. Isolation is a gift. If you have the opportunity to take monk mode in your life to where you can just dial into yourself, you're winning. A lot of folks don't have it like that. They're busy. They got to take care of their wives' problems, their kids' problems. They got to work 2 and 3 jobs. They're hurting. It's tough to be a provider and a trader. But we're here to help. We're here to support. You can come up. We want to hear from you. Your voice is a vibration. It's a frequency. You speaking things into existence are important. Again, I was talking with a trader and he was asking me, Kitt, how do I manifest? You got to think it, you got to feel it, and you got to speak it. And these are affirmations. You have to break the program that you're under. You're under a spell right now that is self-delusion, that's self-hate, that's self-loathing. And what it is, it's a frequency. And what it is, it's a program. And what it is, it's too much fucking porn. And what it is, it's a lot of ways at picking at your weaknesses. It's a lot of ways that really, it's your ego. It's your ego. It's the lack of spirit. It's important that you tap in to affirmations, to your think, to how you feel, and you got to speak it into existence. Success. You want to know what success is? Success is delayed gratification. There's not a person that's ever been successful without that concept. You want to be successful. Get used to delayed gratification. It's not coming right now. You got to build it in your mind first. You got to feel it. You got to prepare. That's what Michael is doing. That's what we are doing. And you need to tap in. And what's cool is this is the tip of the sword. Everything about this entire experience, you are the tip of the sword. You're the front line. Literally, if you go back and watch, if I could turn back time, Michael talks about an army in London, a general. Guess who manifested that, boys and girls? This guy. You want to know how to manifest? I'll tell you how to manifest. It's with thought. It's with feeling. It's with vibration. It's saying it. It's doing it. Anyway, wanted to add that.
A lot of
Keep it going. Keep it. Go
I'm
ahead,
sorry.
buddy.
A lot of the
No,
things that
please.
we put ourselves through in the beginning, it's okay to aspire to have success. It's a good thing to set goals. It's a wonderful thing to make appointments in the future for us to have reached or obtained a measure of skill set, reward, trophy, and basically call that success. But in the beginning, a lot of people don't realize, especially when it comes to trading, is majority of what the work you're doing is you're preparing yourself to contain and live with success. Just wanting success. There's a lot of people that have tasted it. They've had payouts, they've had windfall profits, they had streaks where they made money, felt like everything was working in their favor. They couldn't do anything wrong. But then when the reality is that it's not always like that. There's times like the market is right now where even my own output is greatly diminished because I respect the measure of risk right now. And when I was a 20-year-old, I didn't respect the measure of risk that was in the market then, let alone now. I was incapable at that time to be able to trade in today's markets. When I was 20, I was not prepared to be successful using what I knew then with this market environment. Let that sink in for a second. I knew it. I knew the PD arrays, but I wasn't equipped. I wasn't seasoned enough. I wasn't mature enough to know and recognize my own faults, my own shortcomings as the human, the person that's going to be frail, that's going to have inabilities to stick to a process in the beginning because I was unruly. I was seeking validation and not trusting the idea of being consistent with following a model and following rules. I wanted validation, and validation was, let's do whatever I have to do, over the top leverage to get a win, so that way I can try to show my friends and a woman that I wanted to win back. That's never going to work in a trading model, because what you're doing is you're motivated by external things outside of that model. The model doesn't say make X amount of money to win back your ex-wife. It doesn't say make this much money with this many trades so that way your friends are impressed. That was my mentality back then. Knowing the PD arrays that I know today, knowing the ideas around market structure, micro market structure, all these things, I understood it. But what was off is I was ill prepared to contain, to hold and handle, to wield success. I didn't have it. I didn't have the capacity for it. I was able to make money. I was able to see it work, but I couldn't keep it going in the early stages because I was always letting external things, external factors, external motivations, things to validate me that had nothing to do with the trading. It had nothing to do with the market. It had nothing to do with the model that I was trading. And many times it ignored the drawdown that I was in. I wasn't trying to scale back risk. I was increasing it. I was increasing the level of frequency of how many times I'd go right back in. Even if I took a loss, no problem, I'm going to go back in. I'm going to get it back in more. It was a comeback story. Every trade was a Rocky sequel. I'm going to come back. I'm going to come back. You can't keep me down. And I was burning through accounts. And I wasn't getting any better as a trader by doing those things. So the things that I teach that are seen in lectures, through discussion points like I'm doing right now, It's to remind you, because you're going to get to this point if you stay in it long enough. You're going to be met with this problem. What are you going to do with it? Are you going to just go to your own poor decision making about what you're going to do about putting out that fire, brooming the problem under the rug, pretending it doesn't exist? Or are you going to be mature about it and say, these are things that keep creeping up, and I have to tackle them. I have to come to terms with them and remove them, cut them out like a cancer, and not allow them to fester and grow and spread inside me, where it makes me less of a independent thinker and less of a consistently profitable trader, because I'm being plagued by things that I'm allowing as a distraction. I'm allowing them to be an enabler to do bad decision making. I'm allowing them to be an enabler to keep me in this loop of bad habits and never recognizing the bad habit for what it is. So it's very difficult for people to prime themselves to have this mindset going in, because you're not making money right away. You're dealing with ego, you're dealing with frailty, insecurity, doubts, and you have to leave everybody else's expectations about you and what you think they would expect of you. You need to leave it outside of your fortress of solitude. You got to keep it all outside of that. When you go into the dungeon, you close that door and you're studying over the charts and you're writing in your journal and you're writing down observations and your questions come up and you're writing down your ponderings, your inner musings. You're recording them in a position of anonymity. Nobody else gets to know that. It's just you and your future self. You're having a board meeting with your future self. It's not anybody else's business. And when you strip it down like that, it doesn't make you a callous person. It doesn't make you an unloving father. If you balance everything appropriately, I didn't do it correctly in the beginning, but you have to have rules. You have to have someone that tells you, hey, I did it, and I did it the hard way. And I did it where I hurt my family. I hurt myself. I stole time from both of us. I missed things. I can't go back and do it. I'd give everything I have to go back and just meet my children at the ball field one time and see their face glow when they hit the home run, and I wasn't able to see it. And I had the camcorder in my car because I forgot to take it out and put it in the SUV for my wife to have with her. I missed out completely. And hearing the story and seeing everybody smile about it, it's not the same as me being there seeing it. They remember it. I remember it. And it's a void I can't fill. All the money I've ever made ain't going to fill that hole. So when I talk about these things aren't in books. They're not in Mark Douglas's books. You have a unique opportunity, okay? There's people out there that swear up and down that Wyckoff is the thing. They swear up and down that Mark Douglas's book on trade psychology is the Bible for trade psychology. It's good, but it's not the best. The best is your journal. Your journal, not mine, not my discussion points. Your journal. That's the best psychological trading book. That's the best thing it's ever going to be, because you're walking it, you're living it. And you have the unique opportunity to see what you do and what you decide. What's the cause and effect? What's the reimbursement for that decision? Is it positive? Is it negative? Does it increase your ability to be better, or does it diminish it? And all of you, we read about people like Jesse Livermore. We read about people like Wyckoff. We heard about this guy named Richard Dennis, who trained a couple people off the street from different walks of life, and he created the turtles. You're all in a GAN moment right now. Not because of me, but because of what I've been gifted. And now everybody in the trading community has this within their grasp. They can use it. And if you live long enough, you'll see stories, you'll see books, you'll see other people using these things that you are right here, ground zero, when it came out. And you're in these little time capsules right now in small little settings. Look how many people's in this Twitter space right now, live. It's not a lot. It's not a lot. Many people are sleeping. Many people are like, I'll get to it later on. I'll wait till somebody talks about something and see if it's interesting. But you're here. You're here. You're part of something. Nobody sat back there in time and watched Wyckoff trade. Nobody sat and watched him do those things as an example. Let me show you my theory in action in a live stream. Here's my execution, managing the trade. But you get to see that. You get to see people that learned this doing that. You see Kitt talking about it over live price action. You get to see other students become multimillionaires using what this is. We're not just talking about theory. We're past theory. We're in practical application. Nobody in Wyckoff's time had that experience. Nobody had that experience with Jesse Livermore. We can all read about these people in the past, but you didn't walk hand in hand with them. You didn't have this experience where this is what they presented to the world. And this is them using it. And this is them gifting it and guiding other people so that way they can take it and run with it and do what they want to do with it. You have a unique experience. It's a unique moment in time. And these are all individual time capsules where you can say, I was there. I was there when he said that. I was there when he released that information. And I see it on a chart ever since then. I've always seen it. But this is the day and the time. This is the night that I was part of that group of people that we heard it come out live right then and there. I was there at the moment when that was taught. I was there. How many of you were here when I was talking about the silver bullet? Very first time in a trader roundup discussion, because that's where it was at. How many of you were there when I first introduced the concept of an inversion fair value gap a couple years ago? Look how everybody talks about it now. That's not me beating the chest. That's not me bragging. I'm just saying we're dividing time. We're leaving an etch in the timeline of trading. We've turned it upside down. Trading has been turned upside down. Whether you like me, you don't like me, whether you believe me, it doesn't matter. What we have caused is a disruption. People are noticing it. What used to be dismissed as, oh, that stuff is blah, blah, blah. Now they're all talking about it, they're all using it, and they're making money with it. And they're all from different walks of life. And I think that's a wonderful testimony because you are part of this. It's not just me. I'm the least of this thing. It's all of you. I'm here because I want to see what you do with it. And look how far it's spread. It's like a virus. It's around the world right now, all over the place. And many of you were here at the very beginning. And that's kind of cool.
Beautiful. 11:11. Love the time. Love the time. 11:11's got to be one of my favorites. And where a video or a timestamp might be what it might be, we get to celebrate it together. So, and as a host, I get to call it out. So I am like grinning ear to ear, beaming, glowing. It feels so good. I don't know if it's because it's a late night, the energy. I like being the tip of the sword. So, like when there's fewer people here, I like that personally because it feels more intimate and like the knowledge flow, the connection, all of it. I just love it. So we got more folks here. The specimen did a great job, and I see he's unmuted. Did you want to add anything, mate? I mean, I was gonna.
We all just gotta slow down. Just
I
slow
love
down.
that.
The year just started. As you said, there's less people here. We just gotta slow down and never put a date on your arrival time. Michael said that a long time ago. From the day you started trading or learning to where you are now, we've all grown so much already. Look yourself in the mirror, cheer yourself on, As he said, go in the journal, write it down, and think about how much we've learned. Think how much he shared. Think about how much information we've already received. We've already received enough. If he never did anything else, like he always says, the charts will always provide because whatever he gave us is in the charts. So it's going to provide daily, weekly, monthly, forever. So we already have enough. Let's just all slow down with what we already have. Yes, he might share something next week, next month, new PDRA, whatever, blah, blah, blah. But we have enough right now. Let's slow it down, use what we have, and use it well. Use it well. And at the end of every day, at the end of every week, just really sit back with yourself. We're not doing it for Kitt, we're not doing it for Michael, we're not doing it for me, we're doing it for ourselves. We are the report card at the end of the day. Whatever PD way we choose to engage with the market, whatever model we use to engage with the market, at the end of the day, we have to sit with it and be like, how did I utilize my PDRA? How did I utilize my model? How did I utilize my time window today? Because I know you guys all use NQ. There's 700 plus people here. So all of you guys are looking at NQ. So every hour candle, you guys all see it. Every 4-hour candle, you guys all see it. Every single candle that printed yesterday, everyone got to see it. But each of us have to sit with it at the end of the day and say, how did I utilize these candles that printed over the lapse of time? Did I utilize it well? Did I engage with it with patience, with discipline, with the precision that was required for me to do it for me, for your family, for yourself, for your kids, for whoever? But we all get to see these candles. I'm looking at gold. A lot of people are looking at gold. It doesn't matter the medium, it doesn't matter the chart. The world is looking at these charts on a daily basis. Yes, the brokers may mitigate some things and spread open or whatever, but the body and the full candle and the full story, it's already been scripted. So
Hey,
what's the
bro.
rush?
Quick question. Where are you from?
I was born in Jamaica, but I'm from Canada right now,
Oh,
living
you're
in
from
Edmonton.
Canada. From
Yeah.
Canada. Okay. Right on. And
Yeah.
wait, how old are you again?
I'm 38.
You're 38. All right. I just wanted to make sure I had your specs. How many
Yes,
years
sir.
trading? How many years
Call
total?
it call it 3 years.
Okay,
And
3
when
years.
I say 3 years, I mean like 1 year of learning, listening to his
Yeah, no, I
Twitters, and
got you.
then
No, that's right. I just wanted
yeah.
to
So
encapsulate all of that. And I also wanted to, if it's okay, I wanted to include Nate into the conversation and
yes,
get
sir.
his thoughts and 2 cents. So thank you so much, buddy. I appreciate you.
Thank you.
Nate,
Yeah, hey, can you hear me?
yes, sir. We can hear you great. How
Awesome.
you doing?
Hey, doing great. How about you?
Very well, very well. What give
Awesome.
me your thoughts and process of the evening.
Yeah,
Well,
okay. Well,
first off, you know
yep.
that you
Protocol.
know how to introduce yourself, correct?
Right, yeah.
All right.
So I'm 49. I live just a little bit north of Chicago. Started following ICT in about 2024. And at the moment, I like trading the 7 a.m. pre-market opening range with the first presentation. I'm doing okay with it. I don't really have a model per se yet. Just trying to find my groove, you know. So with that, the question I had is when I was listening to the video tonight, something caught my interest, which was when ICT was talking, I think it was like on a 1-minute chart where he's talking about a fair value gap and price was trading down into that fair value gap. And it had traded all the way through it, and there was like 2 little candles. He called them like little shish kebab candles. They traded just outside of the fair value gap. And then after that happened, it traded back up again through the fair value gap and traded away from it. So my question is, you know, would you actually take a trade on something like that? Is that a high probability condition? Because my understanding is through like fair value gap theory, I don't know what you call it, but it's that we need to demand respect of, bodies respecting the consequent encroachment. Wicks are okay to cross. But in this case, bodies traded all the way down through and then came back up again. And I've seen this in my own tape reading like a lot of times. So is this a condition that is high probability enough to trade on, or is this just something that, because we're in these wonky markets right now, this is kind of, it comes with the territory of these markets? Does that make sense?
Yeah, we kind of like started, at least my portion of being in this space tonight, we kind of started with that
Yes.
observation. I'm not sure if you were here for me discussing that part, because I kind of like mentioned it there. And what I said also during the live stream, it's mainly an artifact of the market conditions that we're in. We're in high volatility, high resistance. It's just, you got to be forgiving, letting the market just color outside the lines a little bit. Because those bodies are so insignificantly small, even though they're just outside of the boundary of the fair value gap, all the other underlying context is still true. So I view that and I interpret that as just an artifact, an aberration, where it's just like, okay, I'm not gonna make more of this. And the analogy I use is, you give your child a coloring book and they color in it, and they finish the page, they think they're done with it, and they colored outside the lines, and they give it to you, and they want to see your smile and like, are you proud of me? And I look at the algorithm as a child of my own, and I'm looking at this and I say, okay, it's not doing anything wrong in my eyes. This is still doing what I would expect it to do, because it should still go up. Now, if you're asking if we were not in this condition and we were not in high resistance and we were not seeing all these geopolitical things going on, would I still take a trade if I saw that? Yes. Because all things being equal, it's just simply that little tiny element of outside the spectrum, the boundary, the lower boundary. If the bodies were significantly longer than what they are, you can't get much difference between the open and close of those bodies. It's so insignificant. Because they're equal, they look like little pieces of meat, okay, or a mushroom at the end of a shish kebab. So it's not that big of a deal. Nobody cares about that. But if it was a full shish kebab, and it's got 5 pieces of beef still on there and a couple pieces of vegetables in between, now we're talking about something that's much more significant. And now that's definitely noteworthy, and we can't attribute precision elements to that because it's much more pronounced.
Got it. Okay, so you're looking more at the context of things.
Yes, exactly.
Okay, and kind of adding it up together. Okay, I got you. Okay, awesome, thank you. And I'd also like to share a tip, something that's been working for me with the community. Maybe some other people might benefit too. Is I've always put off journaling, because it's hard for me to get started with it, and I don't like to sit there and review it. So I've recently, what I did is I found a couple of videos that ICT was talking about, journaling and what you should really be doing with it. And I put it up into ChatGPT, and I asked it to coach me through, making a journal plan for myself. And it was pretty cool because it was able to walk me through Notion. I prefer to do this, electronically rather than by hand. And it kind of walked me through those steps, and I've been sticking with it for a couple months now. And so it's building a habit for me. So I was kind of thinking that, if you're having a trouble with a certain aspect of your trading, ChatGPT is a pretty good, tool to use to maybe help coach you through that. But you don't just ask it, help me through this. You kind of have to explain your situation a little bit, and really listen to some of the points that Michael's teaching. I mean, you can even, ask it to, watch one of his YouTube videos and, format it in that way. So you're kind of getting, some more of the instructions that, Michael's putting out there. So just a tip, I wanted to kind of throw out there as well.
Nate, I wanted to add quickly to what you're saying and reinforce, I think, what you're saying to the trader, to the listener, and that is process and procedure. Because one of the things that folks who aren't successful who are still failing and are inconsistent, one thing that I'm pretty confident in saying that they're not doing is implementing process and procedure. Successful traders do the same thing, and journaling is part of that quote unquote process. And we say do the same thing, it's looking for the same things. You have if then trees, the way you're identifying specific market conditions. I mean, the way you're now able to utilize the PD array matrix, order block theory, core content month 4, the way that you can overlay that onto core content month 8. And I mean, there's 8 episodes in month 8. 8's a big deal, guys. I mean, look at the man's birthday, 8, okay? So 8's a big deal. It's called high probability trading for a reason, okay? So if you want to conceptually understand the schematic of every single model that's laid out in a concentrated format, you're going to look at 6, 7, and 8 core content. 6, 7, and 8. Swing trading 6, short term trading 7, high probability trading 8. You're going to look and you're going to go back and you're going to watch those as you're watching and studying what you're doing now. Why? Because you're the tip of the sword. Why? Because it's the foundation. Why? Because it's part of what you need to do to get better at what you're doing. And then, Nate, when you're talking about what you're talking about, I mean, if you're utilizing AI, cool, groovy, but the trader needs to focus on process, needs to focus on procedure. And where and how are you engaging your model within a consistent process and a consistent procedure? Michael's content, I will reiterate this by simply saying what's super unique about his content is you, the trader, need multiple years of experience. Point blank, I don't care who the fuck you are, you have to trade for multiple years. For you to be a student and for you to absorb multiple years of experience is what you get by being in the ICT mentorship through his YouTube channel, right? So I get to sound like, yeah, go back and listen because it really is a thing. You get different years, and the different years are going to give you a different perspective because time and price is a thing. And the different year, the different quarter, the different market condition is then going to have the applicable ICT concept. And now you're taking the mentorship now and you're applying previous mentorships. And for those of you that are newer, you're simply building a foundation. You're utilizing Trader Roundup. My live streams, you're more than welcome. You're open to attend. We will be going over these exact concepts. I will be citing them live, real time, same way. I mean, order block theory, order block projection theory, as it's taught in episode 3 of month 4, will change your life. It is everything. From a 30-minute chart and then you want to trade on a 1 minute, it's over. If you understand the concept and it's outlined, the process, the procedure, the schematic, you just have to go back, watch it, and align to it. And it's good that we can remind you, right? It's good that you're like, oh, really? Oh, Kitt, really? You mean core content month 8 is that good? Yeah, it's that good.
Can I ask a question in regards to what you're doing with ChatGPT?
Sure, yes.
I heard you say that you're kind of like making a specialty of the pre-market session and
hmm
using the pre-market session, opening range, and the first presented fair value gap. Well, I'm assuming it's the gap and not another PD array. But what
Correct.
is it that what data are you collecting and what are you actually putting into ChatGPT?
So I'm collecting, let's see, it's the kill zone high and low for Asia and London. I'm collecting, when the first presented fair value gap was kind of created. It's more of like there are things that it's telling me kind of what happened overnight, and that helps me figure out what liquidity I want to aim for during that pre-market session. And what's nice about it is it's helping me log as well, like what happened during the morning session. So I have it prompt me out saying that, pre-session, based on what happened overnight, what do I think's, what are my predictions? And I go ahead and put it in there. And then I go ahead and tape read. I may take a trade if I see something. I just do demo account for now. And then post session, when my training session's done, I'll actually stay on until about 11:30 to noon, and tape read the entire morning session. And then after that, it kind of prompts me, well, how did you do today compared to what you thought pre-session? So I'm able to put my feelings in there, but I've got it set up to be more technical right now, because what I'm really trying to learn and focus on is being able to kind of figure out what pattern is forming here. Because I've heard you say before, the market kind of only does maybe 7 or 8 things. It just, they don't repeat all the time in certain patterns, but I'm trying to kind of figure out what those are for myself. And through this process, I'm collecting this data, and it puts it into a database. And what's nice is I can actually ask it, help me look at this data that I'm collecting, and it is kind of helping me, formulate some things. So I've got, like I said, I've got about like 2 months worth of live data. I go in there every day and tape read it, so I don't know if that's kind of answering it, but I'm also able to take screenshots of the sessions, and I annotate them, and then at the end of the week I'll go ahead and review it, things like that.
That's what I was listening for. I wanted to hear if that's what you're doing, because I wasn't sure I understood what you're actually putting, because I don't do anything with ChatGPT. I'm aware of it. I've never even utilized it one time, but the idea of keeping screenshots and annotating them and writing your observations, or an experiment, a drill, a discovery, something that you feel you're led to investigate more. You mentioned how those 2 little tiny candlesticks that had the small little snubbied bodies outside of the low of the fair value gap. Is that something that you would take, or would it negate a high probability setup? Is that really a valid high probability setup if it does those types of things? That would be a great inclusion, like for today. Like, you should have that in your screenshot. Say, look, actually talk to Michael, and this is something that even if it existed in the spectrum of a normal market condition, where we're not seeing all these geopolitical things, and we're not part of a historically low compression trading range on a daily chart, and just things are just so wonky right now, even in that normal market condition, this would still be permissible. So that's something that's noteworthy. It's something that you can write that down and have it part of your data set, and you'll remember it going forward. It's impactful, it's meaningful. And I wasn't sure what you were doing with ChatGPT, if it was something that affords you the ability to take a screenshot with your own annotations. I'm aware of what was the Note something. What did you say it was?
It's called Notion. It's
That's
kind
it,
of like
yeah.
an electronic journal. Yeah, and you can combine it. It's kind of like a note-taking app. But what's cool is they have a database function, and you can set up columns. Like, I'll put in like weekly draw, daily draw, that I think it's got maybe like a internal reaction level, was over certain overnight liquidity taken, what news was out, and you can kind of get all those data points. It puts it in a table for you. And then with each day, you can also have screenshots, to put in it as well. So it kind of like organizes it, and then it actually will spit it out into like a Excel CSV file. And then you can take that file, dump it into ChatGPT, and say, help me come up with some patterns, of the observations that I've seen. And these are observations that are, meaningful to me. And it kind of coaches you through it. So it's not like having you there, it wouldn't be as good as that.
Yeah.
But it does kind of it has helping me build a habit of journaling. And to me, that was the biggest thing, of just getting started with it. And you can make this thing as complicated or as easy as you want. I prefer to just keep things like really simple for now, and I can build on something over time. But for me, it was just about getting started with it, and I had no idea even how to set it up in Notion. So I just asked ChatGPT, this is what I'm looking to do. What do you recommend? And it actually helped me. There's this thing called Notion, and here's how you can. I'm like, well, how do you actually set it up? And it'll give you step-by-step directions on how to do it. So I just did it. So
Can you search with Notion by by date? Like if you enter a
Yes,
certain thing by date?
it is a
Mhm.
cross-filterable database, Michael. Yes, you
Yep.
can utilize more than one variable and more than one filter within your cross-check, like you would in Excel or other types of database management that I'm sure you're extremely familiar with.
Does it allow you
Yep.
to input like keywords, like say, show me every trade um, log with a inversion fair value gap annotated or used as a trade in the PM session? Could you do a search like that, or is it not able to do that?
I mean, if you had that set up as a database field, that's something that you're tracking.
But it can do it.
I think
Yes, it
yeah,
absolutely can do
Okay.
that. You would just
yep,
need to be creating the columns that
right.
were identifying the specific trade, and then you would filter it through the specific, as you said, PM session and or inversions, and it would cross filter the PM inversions.
Yeah. That's the only thing I get questioned all the time because I'm like old school. I prefer high touch over high tech. I'm a dinosaur. My journals, my lecture notes that I teach from are actually recorded in handmade leather journals that cost me over $400 a piece. And I just had another shipment brought to me today by FedEx. It had 3 more delivered to me. I might actually share them on X before I go to bed tonight. But I have no way of being able to recall electronically and say, okay, show me every time that I did this, that, other thing, or if I was talking about this, that, other thing, and then find it all in by date. I don't have that luxury. And I have literally thousands of journals over the last 30 plus years. And I have one room in my house is literally just a library of just those things alone. Long and short of it is I wish, in a way, I had all of the advantages that you all have today with high tech, because I would be much better. I believe I would be much better as a educator and teacher because I could call out certain things that I know by memory. I remember doing certain things, but I don't know the very date. I don't know the market I was doing it on. I don't know the actual setup. But if you could log your stuff and you take a little bit of time to create those fields for searchable functions, that way when you're on a Saturday or Sunday, or if you just get a brainstorming, energetic burst of energy where you're just like, let me go through and see, because I have a unction that makes me think that I learned something here by your own discovery. You see something repeating. Let me go through all the times where I looked at an inversion fair value gap in the PM session when it was part of a bullish day where I expected the daily to close higher than where it opened. And having a criteria like that, that you put that information in when you make a log entry. So that way it would call all those dates and those, I guess, journal entries where you can look at this and do case studies and say, wow, yeah, this thing's really existing there all the time. I wish I had that ability to do it now, but I don't. And there's no way for me to go back through everything I have to make it functionable like that. So it's kind of like I'm behind
I mean,
the tech curve.
there might be, Michael, because if you can, I'm sure you could scan in, and AI is good enough now where it'll look at a scan and it can translate it into the text. So, I mean, it might be a project to go ahead and scan all those
I
pages,
mean,
but
if you really
you might
wanted
be
to
able to
do it,
do it.
Michael,
Yeah.
you could probably update it. I mean, with the world we live in today, if you really wanted to do it, you probably could. I mean, that's all. I mean,
I don't know,
you
man.
probably could.
Yeah, I don't know. Each one of
Be a
these journals
project,
are
but yeah.
500 pages. I mean, they're tomes. Like they're legitimately they're tomes. Like they're good and heavy. And for me to sit down and take all those pages front and back and
Yeah,
good
no, I
grief,
get it. I
man,
get it.
just forget about
Be a lot.
That's a job. I don't want a job. But I'm glad to hear you're doing this. A lot of the men, just they resist the whole idea of journaling because they think they got to write a novel or a novella, and you don't. In the beginning, you don't know really what you're focusing in on. You got to find a groove that starts off rather slow, and it's a couple sketches that you see on a chart, and then as you start seeing things repeat, you'll say, well, I'm noticing this is tending to repeat, and I'm going to spend more time collecting information about this idea of how many times is that first percent to fair value gap forming when I'm expecting it to be bearish. It's actually becoming an inversion fair value gap and going the other direction. And then you become less adversarial to the outcome being contrary to what you expect. Because in the beginning, men, we like to see things go our way. We want it to be our way. And women, and the students I've had over the years, they're a lot more forgiving in that regard. And they're very easily acclimated to journaling. That's something that's inbred in them as, I guess, as an individual by creation. And then as men, we just want to be practical and just give me the tools, let me get out here and just do what I got to do. And we don't want to be scientific about it. We don't want to be meticulous about it. But those things are necessary for us to avoid a lot of the hardships that can be worked out before they become bad habits. And we can also work towards fortifying good habits and being organizationally focused on things that activate our particular activating system. Things that are important to us, we're going to journal. And if you're journaling it, that means it's in your mind fresh. And if it's in your mind fresh, when you go into price action, it's going to leap off at the chart. It's literally going to say, here I am, this is it. You've been waiting for me, and this is it. You can see it happening now. But you won't get that unless you journal. You won't get that if you're actively creating this environment where you care enough to collect the information to see it repeat. Are you a sports fan?
Nate.
I was trying to unmute here.
Yeah.
No, not too much. No.
What is your hobbies, if you don't mind me asking?
I like to play piano and bass. I used to be in a classic rock and blues band, not anymore. But that's pretty much it, aside from trading. So
when you were learning bass, and I mean, just let me tell you, I envy you because I've tried many times over the years to try to learn how to play the guitar, and I fail miserably. I just cannot do it, and I just can't do it. I love it, and I appreciate those individuals that can do it. But when you first were learning the bass, I'm sure you had certain riffs that you just were like, I want to learn how to play this. I've heard this in this song. This is like one of these really cool riffs, and you were maybe perhaps a collector of riffs in the beginning. Is that something that you actually went through, or not so much?
yeah, I just kind of learned by ear. I'd put on a CD of a song that I'd like, and just start playing along with it. And so I was horrible in the beginning too, but that's actually why I took up bass, because it's only one note versus guitars, like you got to have a whole chord.
Right.
So the bass is easier to learn, and I'll tell you, it's never too late to learn if you really want to. But
what you just described is backtesting, and you were going through the motions of finding things that you liked. So what were you doing? You were looking for a model. You were looking for that PD array, that note that you liked in a series of notes that comes across as a riff, and they kept you motivated. You didn't know how to play everything, but you were practicing these small little bite-sized pieces of songs that you liked, that you'd heard, and you would listen to the song, and I guess by intonation, is that what you were doing? Like hearing it and then going by, this is what it sounds like they're doing?
Yep, hearing it. And the more times you do it, you develop the muscle memory. And it's not so awkward, it does get easier, but it's hard to crank through in the beginning, but you get that muscle memory later on, and you can do stuff faster. You can change your finger positions faster, and that's how it progresses. So
that sounds like trading through journaling in the beginning. That's what it sounds like to me.
Yeah. Yep.
And if you apply that same mindset,
exactly,
you'll see that what you're doing is actually you're honing your craft, and you'll be much better as an analyst and then trader because you're doing these types of things. Anyway, I'm
Yeah,
glad you shared what you
exactly.
shared with me. Thank you.
Yeah. Thank you. And thank you, Michael. Thanks
You're
for all
very
your
welcome.
teaching. Appreciate it.
Process, procedure, scientists, musicians. I mean, I work in construction. I know software is the same way. If you build things, then you have to have a process. And understanding process and procedure, or that you need some type of ladder, some type of bridge to get from point A to point B. Journaling is a very good rung, a very good step for you, the trader, to get in the habit of building something. You need to build a journey. You need to build a database. Why? Because as you build it brick by brick, you become stronger, you become better. And that's just what it is. That's what trading is. That's what all of these other things are as well. So if you've ever been through or followed along the process of building something, you'll see that there are critical paths, there's best practice, there's ways in which that you could do it optimally versus not. And that's what we all kind of try and come together to try and figure out, is how to help you build your trade plan, your trade business, your trade framework, and be able to legitimately create the if then statements, the processes and the procedures. What time is it happening? Which kill zone? What specific condition are you looking for? Michael had a great point. Are you trading from an inefficiency or from a range extreme? That's a model. You should be able, when we ask you to how you engage with price even further with your mentor here in the room, you should be able to further articulate yourself without having to be asked. You should. You should be adding that to your own process as you come up here, as who we can tell is paying attention, who is following the assignment, is coming up and following the process and the procedure correctly, because that is an innate way to demonstrate that you know how to follow a process, a procedure. You know how to follow the assignment. All of this has always been about following the assignment. If you understand, if you listen, if you can hear, there are steps that you need to take for you to find your edge. And I heard someone else mention, and we're going to bring up Miss Aiel up here in just a second. But someone's like, yeah, but he's not going to give you all the arrays, but you're going to find your own things based on the foundation that become your own. And you won't have to have anyone second guessed or validated. Is this real? No, because it's yours. You're going to take what he's given you and you're going to be able to build onto it. And that's the whole point. That's the whole point. And then he wants to come here with all of the modular things that he's received over the years within his career, and he wants to hear from you. Miss Aiel, you're up, buddy. Did I say it right, Miss Aiel? Mike, come on. You know who I'm talking about. The real M.
Yes, sir.
All right, buddy. Jump in here.
Can you hear me?
Yes, sir.
All right. So my first time on here. So stop me if I'm not following the criteria here. First time speaking. My name is Miss I am in Houston, Texas. I am a 2024 baby. That's really what my how I engage price. I use mainly first presented fair value gap, post 9:30 a.m. open. If I'm looking to go against what price has done from the AM session, I look for something to go back into the range or something to target what has happened in the morning New York session. So, you know, something like a silver bullet from 10 to 11. But one of the things I did, wanted to ask Michael here, you know, a man who has dedicated his life to precision, right? And my question isn't really with trading here, but Michael, personally, when I began my walk with Christ and I really committed myself, I was Protestant, and I believe that is what you are. And I'm really curious because, you know, I am or was Protestant, but I am now Catholic. So I was, and I'm sure you have done your studies, right? I'm sure you have done your diligency. So I'm just like wondering what has kept you on that side. And I have watched your Berean study videos as well too, right? So I'm kind of just curious on that part, Michael.
I have a lot of students that are Catholics. I have a lot of students that are Muslims. I have a lot of students that have moved from one aisle to the next. I have lots of atheist students, and I have other individuals from different parts of the world under different religions. And I get questioned a lot. Sometimes the questions are very, very uncomfortable because there's simply no way for me to answer them and be honest and run the risk of offending them. So if you'll permit me a minute or two to say what I need to say about it, but it won't be enough to really give you everything that justifies why, in my opinion, I would never be a Catholic, just as much as I would never be a Muslim. The reason why is because the teachings of both are actually opposed to that of what Christ taught the apostles to do. And the Ten Commandments literally teach us not to do the majority of what the Catholic doctrine teaches. So I don't know how else to say it without saying this. Your walk with God, I believe God can direct you. And if you have Christ as your Savior and you believe that He came in the flesh, that He died on the cross and was crucified, dead, buried, and raised Himself up from the dead, if you believe that, and you believe He purchased you and the rest of us as believers by His own blood, and you obey the gospel, not just believe it, you have to obey it. And it means you have to be born of water and spirit, in His name, baptism, full immersion, not sprinkled. If you get sprinkled, that's not being buried in baptism, that's drizzled. Okay. And a lot of the things that, if you do a lot of study and you look at the catechisms and the traditions of men that's in Catholicism, they're extra biblical and they heap on a lot of things that are not expected of us. It's man trying to please man instead of man trying to please God. And I follow the apostles' doctrine, and that is what Jesus literally taught his handpicked individuals. And what they did in the book of Acts, that's what we should be modeling ourselves for church, for ministry, for the understanding of how we're saved. That's the book you go to find out how you're saved. I mean, the Gospels are just simply an invitation to know, behold, He's here, and He dies for our sin. The Old Testament says, behold, He's coming. And the epistles are, this is how we're supposed to live while saved until He comes. And Revelation is, He's returning. So that's the best thing I can give you for right now. And I have put on the shelf a teaching about it because as soon as I felt like I wanted to do it, I felt like God said, it's not yet time to do it because I'll turn off more people before they get to learn more about where we're at on the timeline. And I'm not saying I know the day or the hour. I don't claim to know anything like that. But you got to admit, looking around, things just are not right now. And it's never been like this before. Like everything, everywhere is corrupt. Where's there good anywhere? There isn't. And Christ said that this is exactly what it was going to be like before the final acts. Everything that's going to happen. And he made it very clear in Matthew 24. The generation that sees these things start will see everything come to pass. And that's exciting. And we can look around the world and say, well, this is really dismal. It's depressing. And I don't want to be a Christian because it just reminds me of just how, they're doom and gloomers. I'm not a doom and gloomer. And when you really understand what you're saved from, when I look around, I see all these things happening. I'm excited, not because people are dying, not because there's war, not because people can't afford things, because I know God meant what he said. He said it was going just like this before he happens and before he returns. And if he was that accurate, and everybody, even this God-hating world that we're a part of now, where Christ's name is used as a slur. You don't hear Muhammad's name as a slur. You don't hear Allah used as a slur. You don't hear anything else except for Jesus Christ. His name has got to be used as a slur. If he was so forthcoming to tell us in advance what the conditions would be like before he comes back, and we look around, why would this God-hating world be marching to the steps that he said they would be doing if he wasn't in control? He's on the throne. And I can't subscribe to things that the Catholic Church does because they're extra biblical. That means they're not anchored in what Jesus taught. They're extra. We're not supposed to call any man father. We only have one Father, God. We're not supposed to pray to a priest or ask a priest to forgive us for our sins or confess to him. To be abstaining from meats is a doctrine of demons. I can go on and on and on and on. So I don't want to belabor it and I don't want to be offensive, but you did ask the question, and I am honest, and I'm going to tell you because you asked me. But I can't subscribe to those views in that theology because I don't believe it's biblical.
I hear you. As a Protestant, one of the big things for me, that I couldn't understand that Catholics did was the baptism of babies. And I don't know if you ever heard of something called the DDK. Have you, Michael?
Yeah, the Didache, yeah. I was just actually reading
So
it.
yeah, okay, yeah. So the DDK is actually interesting that you said that Catholics believe that they wanna what did you say? You said they wanted to fulfill men. It was the teaching of men, right? And a lot of the things that Catholics practice, the baptism of babies being one, is in the DDK. And as you said, that we as followers of Christ, are really, because we weren't there, right, in those days of Christ. So what we depend on and lean on is on what the apostles did and what the apostles, right, taught. And one of the things that you mentioned was the abstaining from meats, or there's one other thing that you said, but
Asking
when I really
a
dig deep,
father or a priest to forgive
yeah,
us
yeah,
for our
the
sins.
confession,
Yeah,
to a priest, that's what it was.
yeah.
So actually, I'm pretty sure you've read the verse in John where Peter was given the keys
The kingdom.
to the kingdom, right? And he told the apostles, he says, whatever sins you forgive in heaven will be, I mean, whatever sins you forgive on earth shall be forgiven in heaven, right? And
That's
whatever
not
should
what it
be,
says. It says, whatever you bind in earth will be bound in heaven. Whatever you loose on earth will be loosed in
yeah,
heaven.
exactly.
That's not forgiving sins.
But it does say whatever sins you forgive. If
Misael, bro, I love you. We're not debating, okay? Just the conversation's leading to a debate. I'm not here for a debate.
Right.
You
All
can,
right. Well,
you can go over to my
Michael, I'm
channel.
just
You can go to my channel and in the most recent video. And if you want to have some discussion points there, and maybe I'll use them as fodder for the video should I ever touch on it. Right now, everything's real touch and go. People's emotions are very, very high, and like I don't want to. I don't want to be offensive even to my Muslim students, even though the Bible says that if if you really study what they teach, it's opposed to what the Bible teaches. And I love my students, and I don't want to be offensive to them, but I have to be very careful because I can't do certain things, and I'm trying to be approachable as a mentor in the markets, but you're asking me things that I can't subscribe to. And if you're going to ask me, it has to be in truth. And if you say a scripture says something when it doesn't, I'm not going to be quiet about it. And I'm familiar with what you were talking about, the Didache. I'm familiar with that. And the whole mode of baptism was changed by the Catholic Church because they were baptizing babies, but in error. You can't, the baby doesn't know its left hand from its right. So when you study the book of Acts, when Philip was riding with the Ethiopian, and the Ethiopian said, look at all this water down here. What keeps me from being baptized right now? And Philip said, well, if you believe with all your heart, you will. How does a baby believe with its entire heart that Jesus Christ is God come in the flesh? It doesn't. So when the Catholic Church in error was baptizing babies, they were dunking them, which is what baptism is. You go under the water, but they were drowning them. So the Catholic Church said, okay, let's change it. We'll go to a mode of sprinkling because you can't drown the baby then. And it's you got to go beyond just the Didache. Like there's a whole the Catholic Church is actually a well-rounded historical record of the things they had to do and change when you don't see any of those changes orchestrated or instituted or instructed in the Bible at all. This is what it is. This is the way we do it. And it should not change. In fact, we're told if any other gospel is preached any other way, let it be accursed. And that's my stance on it.
so is it well, where did you see that the Catholic babies were being drowned? I'm kind of curious on that one.
It's historical record, actually. You can just study
Search it
it.
up.
Just do a study.
Okay. Well, I just wanted to hear your opinion. Thank you. You guys have a good
Yep.
night.
You too.
Thank you,
Have a blessed
Kite.
night.
You too. God bless y'all.
Thank you, Misael. Midnight. I like the time.
I
Got
can hang for
Nate.
30 more minutes.
30 more minutes. Sounds good. Sounds good. We got. Let's see. I mean, Ty the Fly's probably got a question. He had an interesting comments earlier. Ty the Fly guy. Big Ty.
Hello, hello.
Hello, sir. How are you?
I'm pretty good. How about yourself?
Pretty good. How can you tap in here, buddy?
So, I had a quick question actually. Um, Title Fly guy. My name is Elliot. Just a quick intro. I've been studying ICT since 2022, 2023 days. The question I have is regarding end dogs, new day opening gaps.
You kind of check your mic real quick. Finger over your mic, maybe a little bit.
Testing 1, 2, 3.
I think
Much
we're
better.
good. Yes, sir.
All right. So I think I mean I'm looking at the charts. I think I kind of found an answer to the question I was going to ask, but I would love some clarification. So like anybody that's familiar with New Day opening gaps, you take the fib with your various levels from the close of the previous day to the open of the next day. Now sometimes I do see like a random print It'll be a gap there, but it'll be a random print on like a small line on price, and then there'll be another gap for the next, a candle. So sometimes I'm looking at the charts and I see like, where do I draw the fibs to that one print? Do I draw it to the actual? And I was going through the timelines, when you go higher up in the time frames to the 1 minute to the 15, 30, 1 hour. I was wondering, is it better to do it that way when it's just the full candle?
Did you get that question, Michael? He's asking about a gap. It's
I wasn't able to follow the whole.
yeah, no, I'm
I'm
trying to
trying.
I'm trying to re-articulate it for you, and I think I'm having a challenge as well. So I mean, Ty, it's I'm trying to help you out here.
So for
So
example, like if you look at the dollar index currently,
dollar index is not a good place for you to try to articulate gaps, is it?
well, I just use I mean, I can understand where you're coming from.
What time frame?
Okay.
I'm sorry?
What time frame? What
Well,
time frame?
I start at the 1 minute looking at the gap on the new daily opening gap. And then I move up on the time frame, and then I see at the 30 minute that there's the actual candle. But on the 1 minute all the way up to 15, there's a single print in price around 98,800. And so I see that, and what I've learned from you was that you take, the close of the previous day, and then draw the fib to the first print of the new day opening. So when I see that one little line in price, I'm just like, is that important, or do I look at it from a higher time frame and adjust it that way? And that's why I thought I'll answer my own question, because if I look at it at the 30 minute, it's pretty clear.
I have no idea what you're inferring by, like, I apologize. I just don't understand what you're either asking or illustrating.
Okay, that's fine. No problem.
I apologize.
Yeah,
Without
no,
a chart.
it's legit. It's legit. Ty, I'm trying to tap in as well, but it's just kind of struggling a little bit. Maybe you can go back and listen to the recording afterwards, and you can help stitch
Scribble up a
us
chart.
in.
You draw what you obviously. I had the dollar index. I pulled up a 1 minute chart. I'm looking at the new day opening gap, and everything else you're saying after that, I'm lost as to what you're trying to draw an idea or a premise or a question. Like I don't know what you're getting at.
Oh,
So
okay. No, that's
just like
understandable. So,
draw it over a chart. Just draw it over a chart and just send it to me and say, hey, this is what I'm referring to. And specifically, in the chart, type out what it is that you have a concern about, because I'll be able to visually see it. It'll be helpful to me in regards to answering you.
awesome. I appreciate that.
You're very welcome.
Yeah, that's something else, and that's okay, Ty. It's all good. But we are looking at within our process and procedure when we have technical questions, we're looking to either refrain from them or be already having some type of, some type of chart in the comments, some type of visual aid. Technical questions without visual aid is a challenge, and I'm not shitting on you, Ty. I'm just trying to let people know in the future. You feel me?
No
No,
problem.
we're not trying to. I'm not trying to discourage you from
Yeah,
having a
no.
technical question. Just be prepared that I may not be equipped to understand what you're outlining, and a
Mhm.
visual aid will help me do a better job of answering
Yeah,
your
I think
question.
it's fair to request that you should be dropping in the comments the picture with your technical question so that anyone who's listening can drop into the comments and see what it is. Really,
Correct.
really, in the comments would be legit. That doesn't mean always that we can get an answer as well. We've made sometimes it's tough to give a technical answer. Sometimes it is.
Kitt and Michael, I think he's referring to 7:33 p.m. New York time. the little tiny, there's like a almost minuscule candle there that's painted and two massive gaps. I think he's referring to that. I can try.
Well, if it's a new day, it would be 17 on the Dixie, right? So your time frame would be different on Dixie versus whatever other asset you were thinking of, because Dixie's its own
Just a
time.
few minutes annotating your chart will make it easier for me to give you what you're looking for.
I think he's saying that on 1 minute levels look different, and on 30 minute it's look different, like opening price level. I guess that.
To me, for what it's worth, it just sounds like Ty could be like a broker or a CFD kind of, or just one of the brokers that might have one of those data candles. I don't know. Pippy's here though. He might have an answer. I don't know.
I was kind of lost in the question.
Yeah, well, that's okay. We were kind of trying to tap in, figure it out. We're gonna get something posted here in the chat, and in the meantime,
Yes, sir. 1 second.
rock on, brother. I'm looking in the chat here myself. Erroneous print in the middle. I see it. I mean, I'd take the whole candle. I'd take that whole gap. It's
Okay, right?
4 minutes ago. Index trader Andrew posted 4 minutes ago in the comments. That's all I'm doing is looking in the comments. There's 100 comments. I'm scrolling down. 1, 2, 3, 4, 5, 6, 7, 8. About 8 messages down. You will see the that massive gap, and you have to zoom in and look. There's a dot in the middle.
I'm gonna
I mean, the
find that
gap is
now. 1 second.
we're losing steam here.
I know, I understand. I'm not trying to slow it down and everything.
Well, we kind of are. So whether you're trying to or not, Ty,
We can
it
always
just
come back
happens.
later. It's no
So,
problem. It's no problem.
all right, right on. I'm gonna keep the conversation going, keep it flowing. Otherwise, I'm gonna fall asleep here, boys. So we don't want that to happen. We have Pippy. Did you want to jump in with anything at all?
Yeah, I got a question. It's actually like a two-part question, actually.
I think this will be good because I like Pippy's questions usually.
All right, so Michael, recently I had asked on one of the spaces. I saw you in the audience. Do you ever utilize a new month opening gap?
Yes.
Like in relation. Oh, you do. Okay. Is there a specific way that you utilize that by any chance, or
The
you
same
don't
way you would
really
see
want to, like a
the
first
same way
presented
you.
fair value gap?
Well, I mean, if it's a sufficient enough gap, which it usually tends to be, you would grade that, and it would be a same premise that you would use for a new week opening gap, new day opening gap, regular trading hours opening range gap. It's a range that you have to be aware of, and if you grade it, you'll have the allowance for potential key levels to be formed inside of it with a PD array.
Okay. Now, also, this is because I've been looking at that for a while, and I never really heard you speak about that. But I also been looking at before a new session opens, right? Like right when the session opens, I like to see some sort of volume imbalance, right? Like as soon as it opens.
When you say
Would
session, are you saying
you,
new start of day at 6 p.m. Eastern time, or are you talking about 9:30 open for regular trading hour session start? Like, what are you saying session is?
I would be talking about any session. So Asian session, London session,
Okay, I got you.
obviously New York
Kill
session,
zone.
PM
Kill
session,
zone.
kill zone, exactly, right? So would you utilize is that something you utilize where you would want to see a specific volume imbalance form before the session opens? Or is that not something you really look at?
I'm not sure what you mean. Like, do I want to see a volume imbalance? Like,
Okay,
I'm
the reason why I've been asking, because I've been seeing at a lot of times right before the session, and I trade off the 5 minute only, right? I don't really utilize any other time frame, right? Except, from my top down. But when I'm trading, my executable time frame is the 5 minute. And I see a lot of times on these 5 minute time frames, right before the kill zone starts, there's some form of volume imbalance, right? And there's different type of volume imbalances. And I just see these volume imbalances form right before the kill zone. And it happens a lot. I don't have any, spreadsheet data on it, right? This is just things that I notice. I just want to know, like, if you utilize that, like a new session, like intraday gap type of thing,
if you're
right? But
thinking
I'm
of it, like, are
mhm.
you asking me like how once we have an opening range or when a specific time window opens up where we're looking for first presented, like for instance, the silver bullet, um, that fair value gap has to form inside of the time. You're saying something that is before the session begins, and it happens to be your observation is a volume imbalance. Am I
Yes.
am I key? I don't personally look anything like that per se, but I'm
Okay.
not trying to say that you shouldn't you shouldn't look at it. You should. If
Of
you feel
course
like you're
not. Of
being,
course not.
yeah. I don't personally do anything with that now.
Okay. All right. No problem. So in regards to the new month opening gap, like you're saying, you would just utilize that the same way you would do an end dog or an end walk, because I see,
Same thing.
depending on when, that month opens, right? It could be like a double like array, right? Where it could be an end dog and a new month
Nested.
opening gap.
Yeah,
Yes,
they could
yes,
be
like
nested or coupled. Yep.
right. So you'll just utilize it simply like a new week opening gap, new month opening. I mean, new day opening gap. Correct.
Yes.
Okay.
Yes.
All right. Thank you.
You're welcome.
So it becomes a nested array, meaning it can stay on your chart longer, right? That's another way of nested being multiple NDOG, NWOG, and then potentially lasting longer on your chart. Right, Michael?
Yes.
Okay.
I like it.
Moist.
I like it. I like it.
Okay. Let's see. We got time for a couple more. Who else we getting up here? Who else we getting up here? We got who's up next? We got Arafin. Arafin's coming up. Arafin's got a good name. Arafin, we've spoke before, correct? You're on mute.
I don't believe we have. This is going to be my first time speaking.
Okay. All right, we'll jump in here then, buddy.
Okay, just a quick introduction about me. I've been trading your concepts, Michael, for about 4 years now. Started in 2022. Studying your concepts, I've tried other stuff, but I've found consistency for longer than I have with your concepts. And I am at a point where I can pretty much trade any session. I can uh, I used to be stuck to a model, but now I just kind of key off of anything that the market gives me, and as long as I can find a PD array and draw on liquidity, I can pretty much catch a move. So trading wise, I'm doing pretty good, but I do want to ask about growth on an account and how someone that has found consistency can plan for it, because majority of my trades are very lower time frame based. So currently what I am worried about is scaling up using the lower time frames, which I kind of don't think is possible. From my understanding, if I want to move size, I would have to move up in time frames. Is there something that you would tell someone who is kind of struggling in that sense to kind of plan for slowly scaling up in their trading journey? That's my question so far.
Michael's going to answer this. I'm just going to reference core content, month 2, episode 5. Month 2, episode 5.
Can I ask you what defines large scale? Like when you say size or scaling up or things like that, what do you have in mind? What like how many contracts are you trying to push through?
I would say so. I haven't had any problems pushing, I would say, anything from 10 to 20 contracts, especially when the books are thin. Little to no slippage, but I would say anything over 20 to 35 on these lower second charts. It's almost impossible to get a normal fill in the futures contracts, at least. So I just want to know if it's possible to be pushing anything above 50 to 100 in these lower time frames charts, which I haven't had any luck with, and I've always needed to move up in the time frames, which is kind of affecting the way I trade, because I do want to keep that. I'm more comfortable trading in the lower time frames, and I don't really like waiting, if that really makes sense. So if you have any experience with that, that would really help me out.
Well, as far as like moving 100 contracts, you can take that 100 contracts and break it up with multiple PD arrays in close proximity to one another. And I do this many times where you'll see my standard 6 contracts, 4 contracts, 2 contracts, 1 contract, or I'll do 6, 3, 1. And by scaling that in, pyramiding it up, you can do that on a 1 minute chart. You can do it on a 15-second chart. I don't think that you need to be trying to push. If you're going to be trying to trade with very, very large sizes, I don't think scaling it up with a 5-second chart is necessary, but you can do it with a 1 minute chart, a 5 minute chart, and still be in real close proximity to a healthy portion of the structure that you're going to be trying to participate in. I don't think that your concern is one that needs to have much stress attributed to it, because what you're saying, 30 contracts is literally nothing. Like you can throw that through 15-second, 5-second chart easily. You can just build that in there easily. And until you get above 100, I don't think you're going to have a concern.
Okay, that's good to know. Yeah, I was thinking the same thing, and slowly transitioning to pyramid style trading. That way, it's kind of allowing for that build up of my position rather than just getting in the position, not having to worry about slippage and commission costs eating up my profits and losses. Uh, but I also had another question, if you don't mind answering that as well.
Sure.
Since I have you here,
Sure, go ahead.
I so one PD array that I've struggled a lot to find consistently has been the IOFEDs. And recently in one of your videos, you did mention where we can kind of expect breakaway gaps, right? Especially when we're leaving from a PD array. I've noticed something that you have kind of taught us is, if you find a fair value gap that's going to turn into an inversion, you want to, let's say for a bullish if you're trading in a dealing range and you're expecting the inversion fair value to kind of act as a bullish PD array, you wanna see price go above it, come back down, and then repel away from it. And then if there's another fair value gap that forms after it, you can pretty much use it to go towards another higher liquidity level. I've noticed by studying that particular fair value gap that forms right after tapping that inversion fair value gap is that usually it leaves a portion open. And after that video that you made, it kind of opened my eyes a little bit, and I wanted to get an opportunity to kind of ask you, is there anything else that you would be willing to share with us on where we can kind of find these IOFUDs more often than not? Anything other than maybe when we're leaving a higher time frame PD array, when we're studying a lower time frame?
When we leave a period of time distortion where part of the day we just go into like sideways consolidation and a large event news would come out. For instance, we can go into the first 30 minutes of trading and say there's a large impact news driver coming out at 10 o'clock. We might have a wonderful pre-session up to around 9 o'clock. And then between 9 o'clock and a few minutes before 10, it just may be just ugly. You don't want to touch it. It's just barcoding. And then right before the 10 o'clock news, there's a separation from that. And it's the first imbalance that leaves. That many times can act as a precursor for institutional or for entry trend. And you run the risk of it being wrong and then getting stopped out. But when you do, if it does stop out, then you're going to just change the direction. And it many times will be just you take a burn in reverse and you run back to a pool of liquidity that was formed during the opening range. But everything else, apart from what I've already said, what you've mentioned, is enough on that in that regards.
Okay, yeah, that sounds helpful. That's all about the questions I had. Thank you, Kit, for the opportunity. Thank you, Michael.
Very welcome.
Pipster's got his hand up.
Yo, Neil got a question in the comments.
Oh, thank you, buddy. Thank you for addressing that.
It says, is there an event horizon element with the PD arrays other than the NWOG and NDOGs? I think I know the answer to this, but obviously I would want Michael to answer.
I first discovered the phenomenon by utilizing new day opening gaps and new week opening gaps. I studied it, and initially my findings were that this is something that's probably just unique to this element. You know, these gaps or inefficiencies that the session starts and day starts, week starts, something to that effect. And then I started looking at how, when I was trying to refine my exits, because it's always been like the sore spot in my trading at the weakest point, I want to have better exits. I want to be more precise about where my exits are. Entries, I have no problem with. So one of the things I started running ideas through was if I'm expecting, say I'm expecting a 100 handle run, and I'm able to nail down partials. I got 50% of the run banked. I got 80% of the run banked, and we're retracing, but it hasn't gone to where I think its terminus is. And I have enough to scale out one more and then get full terminus. If I look at the high, assuming that it's been going up, I find that short-term high that's formed and then the target that where I think it's going to go. I'll take that high that's formed and the target is unrealized yet, hasn't formed yet, hasn't gone to my target yet. My limit order is still sitting there pending. I'll split that range that's unfulfilled in the midpoint, that's event horizon. I'll take a partial there, and that saved me many times with a trade where I'm holding out for my best exit. Many times it just gives me the event horizon midpoint between the high and the high I'm aiming for as a target. Splitting that range, that undelivered portion, splitting that in half. Many times it goes right to the tick, allows the limit order to close out, and then I don't get that full closure. It doesn't go to my target. So it gives me that last little bit of a reward, a little cookie saying you did good, you got a little bit more from it, but you didn't get everything you wanted. So just be content with it. Event horizon can work like that as well.
Boom.
I love it.
Wow. I love Pippy coming up here because he's a charter, and I know he's got good questions because I know he talks to a lot of different charter folks. So Pippy's definitely active in the ICT community. So you're getting some pretty good questions, I think, anyway. And anything else, Pippy? I think we got time for one more.
I don't got nothing at the moment, but I'll definitely come up with some things that
Dude,
are.
yeah, you bring up mentorship thoughts, mentorship quality conversations constantly. So I value and appreciate that. Great questions.
Going back to
Definitely.
the question about the dollar index, I'm looking at the chart and I see like this little tick where it's just like a hash mark between where it started and I'm sorry, where the session ended and where it started. It's like it's
Yes.
7:30 or something.
Yeah.
That little
Yes.
that hash mark that was his question? Like that
Yes,
little
sir.
dash, the
Yeah.
opening
Yes,
table.
sir. That was the question.
I would disregard that and not even consider anything. I wouldn't look at it as dollar index kind of creates these little ghosting things where sometimes there's a little tick there and I just ignore it. I don't do anything with it. I wouldn't run any fibs off of it. I wouldn't do any kind of measurements off of it. I would just look at it as okay. I see it. It's just an artifact, and I wouldn't consider it useful.
So would you look at more like the futures instead of the actual cash market, I guess?
Yes. Yes.
Okay. Yes. That. What do you think that that's actually better to do it that way, or actually look at it, like how you kind of always taught both, right? But do you think it's a little more accurate to look at the futures market over the cash for the dollar? I would say yes.
For dollar, I prefer cash.
Okay. Okay. Okay.
Because
Even with.
you're looking at the very thin liquidity in the
Mm-hmm.
tradable futures contract on dollar, which to me is just it's not a clear depiction. It's not. Let me say it this way: I don't view it as a clear depiction versus the
Mm-hmm.
cash market that's much more smoother.
Okay.
Nate, jump in here, dog.
Yeah, I got a quick question on displacement. Is displacement across a structural high or low, or can it be just a candle high or low? And
Well, the
if you need me
first
to
thing is
elaborate,
you have to know a directional draw. What direction does your analysis indicate that you're hunting a specific liquidity pool above or below, or an inefficiency above or below? So that way you got to have a direction. So where do you think it's going to go, up or down? And then let's assume we're bearish. We create a high and then a slightly higher high. Then a candle drops down, piercing a short-term low between those two highs. That would be an illustration of displacement, where it's showing a willingness to leave the higher high. It's broken through a short-term low. So there's a structural shift that's taken place. Liquidity has been taken that was below that low, and it's stayed lower, and it's a down closed candle. Its projected range is through most recent structure that sent a higher high in place. So when that occurs, now you have displacement. That's basically, have you ever studied the Model 2022 playlist?
no, I haven't.
Well, you'll get your answers for that right there in that playlist.
Right there. Okay, gotcha. Okay, yeah, because I've seen a couple other videos you've done where you've showed displacement, but it wasn't across necessarily a structural low. It was like there was like a series of candles. Let's say it was going up to the high. There would be like 3 candles going up to a high, let's say, and there would be a fair value gap across maybe the second highest candle, and it kind of covered that low, and you picked that fair value gap. Like it was an actual structural low. And what I say by structural, meaning the middle candle has a lower low than the left or right candle, to the left or right of it. So I've kind of seen a couple examples of both like cases. So
Well, you have reversals at market highs and market lows,
mhm,
which is what
mhm,
Model 2022 is going to basically put you in. But
right,
then what happens if you have a run that's underway and it's already been trading for a little while away from the recent high that maybe Model 22 or displacement formed near that high? But
yeah,
now we're part of a sustained price run. You can still see displacement part of a run that goes into a fair value gap and then shoots lower and it displaces lower, then you can start looking for things like immediate rebalance to form after that, or another institutional order flow entry drill where another portion of a lower gap stays open. That element of displacement means it's just simply moving sharply and in a pronounced manner in the direction you anticipate price going anyway. So it's just indicating that one single candle shows a heaviness when it's bearish, or strength in it wants to power higher one time in one candle. It's just showing you that here's your little indicator that it's now we're ready to go. It's like the race has started. It
Yep.
doesn't
Okay.
necessarily
Gotcha.
need a short-term high to be pierced on the downside if we're bearish. That's what forms, and you'll see it. That's the foundation for Model 2022. But then
Okay.
learning about sustained price runs, you can see displacement basically on every PD array that supports this price run that still has yet to come to its full terminus. And you'll be able to see it on a lower time frame because it's the same thing you would see in the highs and the lows in Model 2022. You're just seeing it on a fractal basis on a smaller time frame.
I see. So if I'm looking at a 1 minute chart, I might not see it going through a structural low necessarily on that time frame, but if I drop down to a sub 1 minute, I might actually see it there.
You'll always see it on a 15-second.
Okay, I got you. Okay, that's helpful. Yep, thank you.
You're very welcome. Good question.
Hello, can I ask something, ICT?
Yep, make it quick, okay?
Yeah. I want to ask that in lecture February 10, you have told us to mark 7 a.m. pre-market session in 1 minute time frame and compress the chart and look for the clean highs and lows and relative equal highs and lows, and mark the sell side and buy side, then wait and see which one hit first. So I just want to ask that can I have this one setup for life and be a millionaire with this?
One setup for life and what?
Like 7 a.m. pre-market session, highs and lows, and wait for one side
So
hit.
you're trying to combine the pre-market highs and lows 2024 with one setup for life? Is that it?
Yeah.
Kind of.
Yeah.
Yeah.
Yes. Before 7 a.m. Swing high and swing lows. Like in February 10 lecture.
Well, it would. Well, yeah. Did you understand any of that, Michael?
I think I made the mistake of saying make it quick, and he was talking fast. I didn't pick up really much of what he was
Yes,
saying. Say it
and
again slower. That way I can
yes.
understand what you were saying.
You
That
have
is that's it's a good effort. Good effort.
Yeah.
A for effort.
You have told us to mark 7 a.m. Pre-market session, okay, in 1 minute time frame, and look left side for swing highs and lows, or relative swing and highs lows. Then see one side hit, buy side or sell side, and then target another side.
So you're
Can I
saying,
have this one setup for life?
okay. So you're looking at pre-session, and you're looking for relative equal highs and lows during the London session prior to 7 a.m. Eastern time.
Yeah.
And you're asking if it takes one side of liquidity, can you aim for the opposite side of liquidity and make
Yes.
that your one setup for life? And can you become a millionaire doing that?
Yes.
Okay. First of all, I can't guarantee that you're going to be a millionaire doing anything. And two, if you believe in the power and the science behind compound interest, you can do anything. And if you apply compound interest to it, it can yield the numbers that you just asked about. But can you follow the model, and can you be correct enough without blowing it and over leveraging? Those are the variables that mess it all up for everybody, because we want to rush through it. If you can double 8 to 10 times and comfortably spread out the frequency at which you arrive with transactions between each doubling, becoming a millionaire is easy.
I was watching that and this works so good. Like every time, like out of 10, 8 times it works.
Well, I wouldn't go so far as to say it's that frequent because there's some times where you can see relative equal highs and lows real smooth, and it might go up and run buy side, and you think to yourself, well, now this is going to be an easy run to sell side.
Yeah.
That won't be true. Okay, that won't be true if we made the low in London, and now everything's about to shift and rotate and go higher in the New York session. It will leave that low there, and it won't run it. So what would happen if you had that instance occur for you? Would you abandon trading, or would you say, well, it didn't do that, so now it's indicating that it's actually much stronger. So then you can trade in the regular trading hour session in that direction going higher and mitigate that loss that you just took with half the leverage.
Yeah, I got it. Thank you so much, ICT.
Very welcome.
Love you.
Love you, brother.
Oh, that was awesome. He ended it with "I love you, Michael," and you know he does. That was a great call. It was really good. That was really good. You could tell he was excited. That was really good.
You made my day, ICT. Thank you a lot.
You're very welcome, brother.
Michael, thank you for tonight. Thank you for being here. This is Trader Roundup. I mean, we're here. We made it. Trader Roundup ICT follow through for it was March 9th. Now it is the 10th. So 310. A day that will live in infamy in this man's personal life as far as ex lives. But we'll leave that for another day, another story. Again, everybody, thank you for being here, Michael. It was awesome, and really look forward to seeing y'all in the market tomorrow and later, and anything you'd like to close up with, Michael.
Just have a good night and be safe.
Good night, everyone.